So today has been one of those days where you just go, I'm not looking at the account. I'm not looking at the account. It's one of those days that we've not seen for a while. One of those days that we've not seen really since 2022. It's been a awful day out there. Not particularly for the market, but I've had two stocks that got crushed today. And it's been one of those days where you just go, what a crap day. I'm just going to switch off today. But I'm still here going to record a video and talk about it for you guys. Yeah, it's been ugly. It's one of those that you just want to ignore, but and that's why today we're going to come a finance channel. We're going to talk about fractional shares. I'm only joking. I'm joking. Obviously, even in the good times we're going to be here, and in the bad times we're going to be here. And today is one of those days where you just go, it was an awful day in the market for two stocks, and it made me laugh really, because I've got to say that what is funny is seeing the amount of fear that's created. The fear that is created by stocks going down. If you have a stock that goes down 10, 20%, I cannot believe the fear that you see around the stock. You see so many things that are posted negative about that stock, about it's the end of the world for that stock. Oh, it's like it's gone out of operation. Oh, it's not opening up tomorrow. It's just, it's packed up. It's not operating tomorrow. And you look at it going, like, the amount of people that look at it from let a short-term thing affect them. It's absolutely crazy, the amount of people that struggle with them short-term movements. I mean, don't get me wrong. Today I was like, oh, that's a bit crap, but not to the point. People were in disarray about what was going on in the market. You're looking at the comments around it. You're like, you'd think they've gone bankrupt. You'd think that they've gone bankrupt. That's how people get devastated around some of these stocks. And you look at the mentality around it, and the amount of people distraught about a 10, 20% movement in the stock going downwards. I mean, you're going to see multiple of them drops in your lifetime as an investor. You're going to go through multiple of them times as an investor. And it makes me laugh because, the amount of noise that goes around a stock dropping, and then when compared to the mentality of when a stock goes up, it's like, oh, well, I want to buy more of them shares. Oh, look, it's so quiet. Everyone's looking at, oh, look how much I'm up on them. So it's crazy, like the mentality around when a stock goes up to when one goes down. And what's amazed me today is seeing like the I don't know how to put it, the noise that kind of comes out when a stock goes down. Like you don't really realise, but obviously being in this space talking about stocks, you don't realise how many people actually hate you. You don't realise how many people actually think about you during the day and then see something and go, oh, I've got to get on there and post something about it. Like, people actually really enjoy that sort of stuff, and the noise that kind of comes out when things go down, it's crazy. Like, we're going to talk about two stocks today, and both of these stocks that I talk about, there was a point where one of them was up over 100% and was sold for 100% profit, and then another one that was sold for over 300% profit. And it's very quiet at them sort of times, but as soon as one of those stocks then has that drop, it's funny to see how many people are out there wanting to see you fail in the public eye. Really, I've got to say, it's been a very eye-opening day to see just people, and people's enjoyment at seeing people fail. It's I don't know why people are that way. I don't know if they are just having a miserable life or enjoy just being that way, or need to take it out on someone. It's crazy. But anyway, enough of that. Let's get stuck onto the what's gone on today. So first of all, inflation came out. Basically, the consensus was 3.6. It came at 3.7. Not much to talk about there. 0.1 isn't going to make much of a difference up or down. So that was basically in line. We expected it to be a little bit high because of the oil situation that increased during the month of September. If you look at CPI, obviously takes out our core inflation. It was a drop from 4.3 to 4.1. So the market was kind of all right with that, because it seems to be moving a bit in the right direction really from these numbers that the government uses. Let's get on to the first stock that had a bit of an ugly day. National Express, or as the new name goes, Mobico Group, down 27% today. And the weird thing is that originally when the stock kind of opened up, what did it open at? It opened at 83, and you can see here the previous close was 85. So originally the stock was only down 1 or 2%, and then it went a little bit lower and lower as the day went on, and it just dropped and dropped and dropped. And the first hour just it was like a flush of sales that came in. So I found that a bit weird, that it was kind of a slower drop, not an instant kind of rush. I don't know if that was once again like fear, people panicking and selling more and more as the drop kind of went on there. I looked at the numbers from Mobico Group and I was a bit like, oh, that could have been a bit better. And I thought, yeah, it's going to get punished a little bit. It's probably going to get punished, maybe 5%, 10% today. I could not believe it when the stock was down 30%. I was looking at it going, the numbers were disappointing, but I couldn't believe the fear around the stock, and to see the stock go 30% down. Like we were talking about, the company's now a 377 million market cap. Before today, the company was a 500 million market cap plus company. This company has had massive amounts, over nearly 200 million of the market cap wiped out today. It was crazy to see how much of the market cap was wiped out today on this news. And I looked at it, and when we look at what kind of went on in Q3 trading update, all planned. We knew it was going to be this week. Group revenue up 10%. Growth is still very good. There's no issue around the growth here. Same as the last kind of interim results is the drive up to profitability that we're looking at. They downgraded their guidance from a EBITDA point of view to be, I think it was previously 200 million on the low side. It's now 175 million on the low side. So it was a 25 million downgrade on that point of view. And I was like, oh, we didn't really want to see that downgrade happen. You never want to see a downgrade happen. You want them to either be in line or an upgrade. So it was a bit like, oh, they're going to get punished on the share price. 25 million miss. I thought, they're going to probably get punished a little bit on that share price. Maybe 25 million, wiped off that market cap today. But the fact that we saw, nearly a third of the market cap, we nearly saw 200 million wiped off the market cap. I was like, that's crazy. Like, I would have thought with that drop here, I would have thought we'd be talking about EBITDA was wiped in half. That's what I thought we'd be talking about today, not 25 million. I thought we'd be talking about like 100 million wiped off. But 25, if this company still does 175 million, we're nearly towards the end of the year, so we won't have to wait too long. If they do 175 million to 185 million in EBITDA this year, and don't forget, most of this is coming from the second half. The company's going to be trading around about 2 times EBITDA or EBIT. That's very, very good. And if we can have that for a full year and they keep showing the improvement, because don't forget, this is going to be a big improvement. I think the loss on the first half of the year was like 30 million. We're still going to see a massive improvement. So if they can do this for a full year and keep improving the profitability, it's not that bad at all. If we see this is still improvement, it's just not what we wanted. And that's the crazy thing about it. And I was disappointed, but I looked and thought, this is ridiculous. They said that they are still on about the cost cutting program that they're going to be seeing. They said that is decided to prepare the North America school bus business for potential disposal. I can understand that, because if you listen to National Express over the last few months, we've known about the bus driver shortages seems to be causing a big headache for the company. And I think First Group were very similar. They got rid of their school buses business as well, which I think this is a space that's been causing them a few problems. So maybe this will take a little bit of an impact on revenue. But from a profit point of view, I don't think it'll have much impact on the business in the longer term. So, and as well as that, probably strengthen the balance sheet up as well. They also said they're going to suspend the financial 23 final dividend. I think most of us, I've been saying on this channel for ages that was the wrong decision. Obviously, it's good that they've now come to the right decision, strengthen up the balance sheet. One of the big issues that everyone's had about this company is the balance sheet, and they're getting rid of, part of the business that will strengthen up the balance sheet, and also the dividend will strengthen up the balance sheet as well. And you don't have to worry about, paying out cash that they can't really afford at the moment. So the balance sheet is going to be in a better point of view, and that's always been everyone's big concern. And actually, it's going to be stronger now. So I actually looked at it in really positive today. And obviously, when the thing is, well, is like when the dividend came back, you got to remember, like, the share price reacted nothing at all to the dividend coming back. Nothing at all. So the drop today, I surely don't think is because of the cut in the dividend, because there was no reaction to it coming back a few months ago. So this all comes for me is a 25 million downgrade guidance on there, which is crazy. Like, don't get me wrong, I looked at this today and I was a bit like, we wanted to see a little bit better. We didn't want to see the downgrade in the guidance, but realistically, this is still improving at a good rate and it's still at this valuation, to me, attractive. So I just thought, like, I could understand the stock being down maybe 5-10% today. 30%, I think that was a crazy drop off in that one. So still a fan of that one. I will be more concerned if is that we start seeing this dropping more and more going forward. But I think maybe they've already took the cut now. So we'll see what happens there. InMode down 21% today. This stock cannot get a break at the moment. It's had a tough couple of months at the moment. It's lost 50% of its value in a couple of months, and I didn't think this was going to happen. I talked about this a while ago. I said I don't think we'll see this happen with InMode, but you never know in the stock market. You never know, and it has happened. It's had a major drop. And what surprises me with InMode again, it's a bit like a National Express, but not to the levels of that, because this company has an amazing balance sheet. It has a really good balance sheet. It's a big profitable company. And the big thing is, you look at InMode, the big difference they made is they downgraded their full year revenue. They downgraded it from 530 million from 505 million down to 500 million to 510 million. They had about a 30 million downgrade in the revenue guidance, and maybe that does hit the profitability slightly. But they said that they are seeing slower demand over the summer, which is always the quiet period. But they also said that the sales slowdown was due to higher interest rates and tighter leasing standards and problems in loan processing for potential buyers. Makes sense, this equipment is a little bit expensive. You probably buy it through a lot of interest rates and lending. So this is just the prime example that the economy is slowing down. And I can accept that from InMode. I can accept that they are seeing a few issues in this sort of space. That's absolutely fine. And I can understand there's a bit of a cut. Don't get me wrong, it's disappointing because we've not seen InMode ever do this since I've been a shareholder. But I can understand why they're seeing a bit of tough numbers. And I thought 30 million downgrade, yeah, not good. But same again, I'm looking, it was only 30 million. And yet you look at InMode, and same again, InMode's had, 20%, a fifth of the market cap wiped out today. It's scary. Like, a fifth of the market cap it's scary. And the crazy thing when you look at InMode is, like, I would understand this stock moving that much if it was at 52-week highs. But we're talking about InMode that is already historically so cheap. You look at total enterprise value to EBITDA. You look at when it IPO'd, it was all the way up to 17. It's now down at a 6. You look at normalized earnings, 15, 23, 30, 22, 21, 29, 34, 48, 35, all the way down to a 10 now. So you look at like total enterprise to EBITDA, there's a 6. And, when you look at like this June 2020, it was 18. You look at June 2021, it was 27. Like, it's a third of its historic valuation now. We're not talking about a company that's richly valued here. We're already talking about a stock that's beaten down, and then it takes this drop. It's down at 10 times earnings. It's unbelievable. And the most unbelievable thing about InMode as well is, like, this is the first time I've seen InMode give disappointing numbers. And the stock drops off 20% off disappointing numbers, which is already at 52 close. And I remember 3 months ago, 6 months ago, 9 months ago, the last three earnings were fantastic. And them three earnings, it's frustrating because you saw them earnings so ahead of expectations, and yet it's not reflected in the share price. But then as soon as one bad update comes down, boom, share price down. And it is frustrating as a shareholder to see that. Today I was frustrated looking at Mobico Group and looking at their drop going, come on. That's a bit of a drop. This was the bigger one. This was the bigger one for me because I've seen this stock deliver. You look at the last kind of year, and let's just call it a year. The last kind of year, and the stock hasn't really done much. And I've seen 4 or 5 earnings in that report that have been fabulous and so ahead of guidance, and yet one stock, boom, drops that much. And it just shows you the difference between being bullish and the sentiment around, good earnings, yeah, it's fine, and it doesn't get the rewards. But then as soon as it has a little bit of a boom, a major drop. And for me, I look at this and go, are we really going to do this to InMode? Like, this company that has delivered, since I've owned this one, I must have seen at least 12 earnings that have been 10 out of 10. And it looks like it's going to bring one out that's a little bit disappointing. And then it goes boom, like that, and falls off a cliff. It is frustrating as a shareholder, but you've got to still look at the company and, realistically, can you justify why it's having a drop today? Yeah, you look at the interest rate environments, it's tough out there. If this is a time it's going to have a drop, it's going to have, it's got, where the company's headquarters is, there's a big war going on. So if it's going to have a drop, this is its time, it's going to have a drop, which is fair enough. But realistically, 10 times earnings with still very decent numbers when you look at them over a year's period. It's crazy. It's absolutely crazy. Darktrace. So Darktrace, I think this drop here was a little bit of a glitch here, so I don't trust that. But it did have a bit of a drop as the stock opened. It did have a bit of a recovery as the day goes on. And, this does sometimes have, it's just updated now. I thought it was a bit of a glitch. So it did, some buyers did come in and buy this drop. But, once again, I look at this stock and I think, a cybersecurity stock, putting in 28% year-over-year growth, now driving up the profitability this much. This stock that is, I think this is doing absolutely fantastic. And then this drop today, I couldn't believe it. Like, it shows you like the negative sentiment that's still around at stocks. Like, there's so many stocks that you look at and think, in the longer term, some of these stocks are going to be a lot more fairer reflected. And it just shows you that there's that sentiment around, that the economy's slowing down and the fear that's around then. Some of these stocks look great opportunities right now. And to top it off today, this is what nearly pushed me over the edge, is that Walgreens is up nearly 5% today. And I couldn't believe this, because I looked at these earnings, and these were the earnings that I looked at and went, they missed by EPS by a little, decent growth, but the guidance was a little bit weak. And it was a bit like, it was a free shot for them because they've got the new kind of CEO kind of coming in, so it wasn't going to be judged seriously. And I thought the market would just go flat on it. I thought, a little bit of a downgrade in the outlook. EPS was a little missed. Revenue was a little bit of, a bit ahead of expectation. 9% growth isn't too bad. I thought the market would go, they're all right, but we won't take them serious because we're waiting for the CEO to come in. And you get this stock down here, this one's been beaten down, and then it's up 5%. And this was a big frustrating thing today in the market, because I looked at these earnings and I was like, I don't expect much from this one today. And then this one is up. And then I looked at Darktrace and I thought, these, for a hot cybersecurity, the space that it's going to be in the next few years, and it's pulling out these earnings when companies are pulling back all the spending, driving up profitability, growing at 20+% revenue growth, and it's dropping off those earnings. And you got like InMode has its first kind of historic lows, has its first disappointing quarter, yet that wipes up that much off the market cap. Mobico Group, that is already at 52 close, that has maybe a profit warning and downgrades by 25 million. That has a third of its market cap, near 200 million wiped off its market cap, and you're like, come on, that's a bit of an overreaction. And you look at this and you go, Walgreens is up today. Like, it's crazy. Like, I wouldn't say Walgreens had any better earnings than Darktrace or InMode or Mobico Group, and yet it shows you, like, short term, anything can happen in the stock market. Anything can happen. And judging stock prices off short terms movements is crazy. I saw the other day someone was judging a stock price that they owned for 12 months. If you're in this game for 12 months, you can have a company that brings out good earnings and it's down. In 12 months, you can have a company that has bad earnings and it's up in the next 12 months. Short term, anything can happen in this game. That's where we're at. But realistically, the big thing to judge these companies off is the longer term. Because in the longer term, when the sentiment changes, a lot of these valuations are going to change in this company. And you look at some of these companies that are still doing okay in this environment and are still getting punished for it. It's absolutely crazy. So one of those days where it's a little bit frustrating to see some of the movements out there. But probably one of those where it's not one to be checking what the share prices are doing right now, but better to observe it from a longer period of time, and that will be a better, fairer reflection where if it is a quality company, it will weather the storm, even if there's tough, economic environments going on out there at the moment. Anyway, so hope you enjoyed the video, guys. See you in a bit.